Hello and welcome to video 2 in a series of videos that demonstrate how to use the Fractal Trading Suite for Bloomberg. In the last video we left off with instruction on how to plot the predictors on the trading chart. We are going to continue in this video with instruction on how to place some of the other indicators that are available onto the trading chart itself. First, let's open up the settings selections and look at price used in analysis. This is a drop-down menu, and if you click on this menu you will see various different types of prices that can be applied to a price plot that will be placed over the trading chart. The default is close price value. However, you have a choice of different types and combinations of prices, everything from open high low close to high low close average to true open high low close average. So first let's start with the default close and then move down to our plot. So we'll scroll down until we see plot price. Here you see the checkbox. Let's click in that and then click update. Now what you will see is a point-to-point plot of the closing prices of each one of the open, high, low, close bars. While obviously this cannot be used for any sort of forecasting, it has uses for reference points that can be used with other types of indicators in the suite. So I'll zoom into this so you can take a better look. And you see that the line is connecting point to point the closing price of each bar. So now let's say we wanted to look at another price. We can go back to the menu, go to price used in analysis, click on the drop down menu, and change it from close to say open price. Now it calculates and plots point to point the open price of each bar. So again, I'm going to zoom in, and you can see that each point is connected by a line, and each point is the open price of the bar. So now if we want to use something a little more unique, we can also go back to the price used in analysis drop down menu and select, for instance, open, high, low, close average number 7. Click on that, click update, and now we will see a point-to-point plot of the open, high, low, close average. So we'll zoom in again, and now you can see that the line is not connecting to any one specific open, high, low, close point, but it's actually calculating an average and then placing the point at that price. So again, this is not used for forecasting or for predicting price, but it is useful as a reference point for certain types of analysis. Moving on, I'm going to remove the price plot, and I'm going to plot an entry channel that can be used for actually entering trades. And I'm going to do this with the help of the predicted mean. So here at the top here you see where it says plot mean. Well, this is not an ordinary mean that you may be accustomed to in standard trading packages. It's actually computed with the predicted high and low of the predictor that you are using. So I am going to select this, and then what we find is we can use this with plot entry channel and plot stop loss channel. So before I go into detail on those two, I'm going to plot the mean so you can see what that looks like. Okay, and then I will zoom in again. And here you have the mean of the predicted high and low. So now what we want to do to create an entry channel, which is typically used for a reversion strategy, is we need to calculate a certain number of standard deviations around this predicted mean. So now again, bear in mind that all of this is forward looking. It's an actual forecast with the predictor. So this is not a lagging indicator like you would see in some of the other standard trading packages. It's easy enough to add the entry channel. What we do first is go to entry channel threshold. Now this is your standard deviation for the entry channel. Typically what I like to use is 1 to 1.2, which is going to encompass about 2/3 of the trades, or the price action I should say, that you encounter on a regular basis. And you can change this of course to any number that you like, but just as a general rule I find that that works for me. So I'll just to demonstrate an actual number change, I will use 1.2 and then scroll down to plot entry channel. Click on it, click update, and now we will have a channel surrounding the forecasted mean. And there it is. And I might add while we're doing this that the colors can be changed to whatever is useful to you, and at some point in one of the videos I will demonstrate how you can change that. Okay, so we see that we have the predicted mean and we have the entry points, which are represented in the legend as sell short, buy long, and we have the exact values. So in this case sell short is at 91.7, buy long is at 91.5. And you can see that it does a pretty good job of encapsulating price and picking the high and low areas of the bars. Now one other feature that you can use with the entry channel is this. Now the other feature that I would like to explain is the minimum ticks to enter trade selection. Now this is an input variable that you select, which allows you to control the minimum amount of distance from the entry channel to the mean. Now the purpose in this is so that if you have a certain profit objective, and being that this is a reversion strategy, we want to enter the trade and exit as soon as possible, you can set that minimum profit amount or target within the boundaries of the entry channel itself. So as an example, let's say that the entry channel typically is in a range from the mean of anywhere from, I don't know, say 10 to 20 ticks, but you really don't want to enter the trade unless it's say 25 ticks away. So what we can do is enter 25 in here, click update, and what will happen is the minimum distance that the entry channel, either side of the entry channel, will be from the predicted mean is the selection, so in this case the 25 ticks. And if you can visually see the difference, it has expanded somewhat here. For visual purposes I'm going to change this to a more dramatic number so you can see exactly how it is working. So 200 ticks, click update, and now you will definitely see a change. Okay, so now each side of the entry channel should be 200 ticks away from the predicted mean. So let's go and take a look at our sell short value, which is 93.6, and let's take a look at our mean. We see it is 91.6. The distance is 200 ticks. Again, we go to the buy long, 89.6, the mean 91.6, the distance is again 200 ticks. So this is a demonstration of how you can control that at a minimum distance. I mean, obviously you're not going to be using dramatic numbers like 200 in most cases, but just for the sake of demonstration, this does a good job of visually explaining this. Okay, so I'm going to change this back to a more acceptable number, say 10 ticks. And the last piece for this video that I would like to show you is a channel that is similar to the entry channel, but it's actually a stop loss channel. The stop loss channel is very similar. You scroll down, you can see that it's controlled by this input auto stop threshold. The reason why we call it auto stop is because it's dynamically changing with the entry channel. This input value here is defaulted at 3, which is 3 standard deviations from the mean. So I'm going to leave that there for right now, and then scroll down to plot stop loss channel. Click on that, click update, and you should see the channel appear, which it does here in red. So we can look at the, let's zoom in on this so you can get a better view. You can see here that we can surround this entry channel with the stop loss channel, and being that at 3 standard deviations we should be encapsulating about over 99% of the trades, or I should say price range, then it's likely that if a price were to fall outside of that range, that there's either some sort of an extraneous shock that's taking place in the market or some other sort of black swan event, in which case it may be prudent to exit the market, reevaluate, and wait for another time to get back in. One other feature that I'm going to leave you with before we finish this video is the ability to set a minimum distance from the entry channel and the stop loss. Now this may be useful for a number of reasons, but most likely you have a situation where you don't want the stop loss to be so close to the entry channel that you enter the trade and then within a few ticks you're stopped out if you're placing prices there. Now this most of the time will not happen because of the depending on how you set your auto stop threshold and your entry channel threshold. I mean, typically at 3 standard deviations to 1 standard deviation, it should not be close to the entry channel most of the time, but it can happen. So if you want to control that, you can go into this minimum ticks for auto stop entry, change the variable to read a certain number of ticks, and for this example, again, let's use an extreme case, 200 ticks for instance, and you will see how that affects the auto stop channel. Okay, you see how it expanded. Now we should be 200 ticks away from the entry channels. So let's take a look. We have our buy long entry channel is 91.50, and then let's go ahead and see what our sell stop is, 89.50, 200 ticks. Going back to sell short, we see 91.70, and then let's go back to our buy stop, 93.70, 200 ticks. So here you can see how you can effectively control the minimum distance from the entry channel with the auto stop feature, and also how you can control the minimum distance from the predicted mean and the entry channel by using the minimum ticks to enter trade feature. So at this point I'm going to end this video, and we will continue with some of the other options available that you can place on the trading chart in video 3. Thank you and have a great day.